Hello there, I'm Aaron Johnson, financial advisor and partner at the Dwayne Johnson Group and Bridger Financial Services. It's hard to believe that we're halfway through 2025 already. It seems like just yesterday we were closing out 2024. There was much anticipation, excitement, and optimism as we started this year. I'm here to just kind of give you a recap of the first half of the year and then kind of let you know what we think will be going on the second half of this year. We've had a lot of excitement over the past 6 months. Markets initially went up, set new records, and then just dropped around 20%. And we're back to now being on the verge to set new records. It's really been a tale of two completely different quarters. The first quarter starting strong and then losing steam at the beginning of the second quarter, and then accelerating again just as quickly as we had the decline. One of the big market movers at the first half of 2025 in particular was the conflict between Israel and Iran, which culminated in the U.S. striking Iran as well. Other major themes were tariffs, Doge, and of course the big beautiful bill reconciliation package. January was really strong, but as the first quarter progressed, some of the administration's policies, particularly with regards to tariffs and spending cuts, began to weigh on the markets, which started to stall and slide as we closed out that first quarter. The slide really accelerated after President Trump's Liberation Day tariffs were announced. The selling continued on for a week until the president announced a 90-day suspension of the tariffs, except for China. The tariffs did not completely go away. There were still 10% tariffs across the board, but the pause seemed to calm markets, and then they rebounded once the president suspended tariffs on China. Whether it was pressure from the bond markets, a shift to a less aggressive policy stance, or plain old strategery and art of the deal stuff, the S&P 500 bounced back to over 6,000, and we're well on our way to new highs by mid-June. But volatility returned as we ended the second quarter with Israeli airstrikes on Iran, which was believed to be very close to building a nuclear bomb. Oil prices shot up and there was talk of a wider regional conflict. Then the U.S. got involved, joined Israel, and pounded Iran's 3 major nuclear sites, some of which were very deep underground. That occurred on June 22nd, and 2 days later, Trump announced tariffs, or announced a ceasefire, calm return to the markets, and oil prices dropped very sharply. So let's talk about the broad economy in the first half of 2025. First quarter GDP came in at a negative 0.5%. It was a bit fluky because imports were running much higher in advance of tariff announcements. I don't expect second quarter GDP to be negative, but we won't know until that comes in closer to the end of July. It hasn't come in as of this recording. Nor do we expect a recession in the second half of 2025. The Fed so far this year has pretty much just been a spectator for the most part. There have been no major rate cuts since last December, and it looks as if any rate cuts will not be until September. Right now, the expectation is still for 2 rate cuts by the end of the year. Inflation continues to decline. The CPI was at 2.4% in May. Despite all the dire warnings, headlines surrounding the tariffs and all the inflation they would bring, it just hasn't happened, and inflation's moving in the right direction. The job picture has softened a bit, but is still solid, keeping the economy moving and making it harder for the Fed to commit to cutting rates. First quarter earnings were really good despite all the headwinds and headlines, and there's no reason to expect a bad second quarter earnings season again. And again, we don't see a recession in the near term unless there is a substantial deterioration in economic conditions. Things like higher unemployment or a lot lower consumer spending, and that just isn't evident yet. So how is the second half of the year going to play out? Well, you know how I feel about predictions. Not a big fan. I would just simply say that there appears to be a lot more that can potentially go right than go wrong at this point. As I see things, I would say that the glass is definitely more half full than half empty. Given everything that's in motion right now, there are some likely catalysts that can move the markets. This would include the passage of the big beautiful bill, which looks like it will pass, the resolution of trade talks and tariff fears kind of going away, the Fed finally beginning to lower rates, and potentially lower energy costs and less regulations will all spur the economy onward. Of course, there's always the possibility of some geopolitical event that could, send a shock through the markets, just like we kind of saw with Iran. The good news from my standpoint is that there are a lot of things that can go right. I'm optimistic about having a strong second half to this year. However, that will be tested and tempted. I think we can expect more volatility in the second half, just like we've had in the first half. As we are in the summer, I'd focus on kind of what can be controlled, specifically your emotions, your plan, how we can keep you on track with that plan to meet your goals. If we're out of balance, we need to get back in balance toward the end of summer. So, now would be a good time to do that. We've been keeping an eye on all of our client portfolios and making sure that they're not too out of balance. I would not recommend entering the second half of 2025 thinking we are out of the woods yet. Alertness is kind of the name of the game. Now is not the time to lose focus. Remember, think big picture, push out all those external daily events, which will drive you crazy if you keep chasing after the latest news headlines. But thank you for your time, and we'll talk to you again at the end of the third quarter.